Hello, fellow chartists. Welcome to my YouTube channel. I am the Chartist, and it is the end of the week. All right, end of the month. I think we have one more trading day in January. I need to look at a calendar, but this might be the end of January, guys. So next week begins February's trading month. All right, should be very exciting. I hope you guys had a very profitable month. But anyways, here's the flow sentiment between put and call ratio: 65% to put, 35% to calls. Uh, you can see some calls coming in. These are all 200,000 or above premiums, by the way. I have it filtered out right here, and you can see some calls coming in. These are all in the money calls, all in the money. 1.1 million, 1.6, all in the money calls. They are weeklies. This one actually expires today. So yeah, I'm pretty sure they made some money. Yeah, but not as bad as the other days. There were some points where puts were taken over at certain points. But yeah, 65 cents percent to puts, 35% to calls. Nothing really sticking out to me as far as that goes. Check out my Discord, guys. So every morning on my Discord, I post a plan before the market opens. Plan today, right here. 428 support, 432 now resistant. Could chop more, but unless 432 clears and recaptures 421 to 422 zone, then 415 to 417. Okay, so I believed if we couldn't recapture 432 or lost the 428 support, I thought we would get into new lows, right? That's just the scenario. That's just the plan. Gotta watch the scenario play out. And I went on over here, add a little bit more notes, and I put over here, bears want to hold below 432 to keep the rec sell in play. Otherwise, we chop more, squeeze back to 439, etc. So, pretty much, I was bullish above 432 and bearish below 432 and more bearish below 428 because you got to play it level to level. I'm getting repetitive with that, but I hope you guys understand what I mean level to level. So from support to resistant or resistant to support. So obviously we're under 432 and that's a resistant, 428 support. So if we're playing a bearish scenario to the downside, we play it to that level. Okay? But take a look at this 5-minute chart. Did the chartist plan come to fruition? Well, right here, this candle right here, that's where the market opened at 9:30. We tested the 433 level and just dropped all the way down to the 428 support. It held, guys. All right. So remember the plan. You go long at where? Support. All right. But maybe you didn't. Okay. And it went all the way up and retested 432 again. Couldn't break it. Came back down. Tried it again. And it broke. Okay. Now here's where it gets tricky. You see how these candles right there? It broke above 432. Alright. Because 432 was resistant. Alright. It broke above 432 because it was resistant. Then see how it treats it like support. And it's more than 15 minutes too. Boom. Recaptured. Recaptured 432. Remember I said above 432 we're going to chop up to 439, etc. I had a 437 price target first because I added more content and updates in the Discord. So 437 was first and then 439. As you can see, it went up, hit 437 over here around noon, and it just dropped all the way back down to the 432 support. This is where it surprised me. I didn't think it was going to hold because it got tested so many times. However, it was still support and we have to wait for confirmation. As you can see, in the morning around here, we recaptured it. This time, we retested it and it held and boom, it squeezed all the way up, hit the 437 price target again, broke above that and hit 439 price target and beyond. So it closed around 441, almost 442. All right. So, awesome technical analysis on the Discord. I hope everybody was able to follow the plan. But we're looking at a daily chart now. All right, I'm gonna take out these fib levels. I don't think I will need them right now. But you see that purple line right there? That's the 200-day moving average. And this blue line right here, that's a support level that connected the November 2020 low to the March 2021 low. And as you can see, we got a bunch of tests there. And it pretty much held up each time. So this past week, it's pretty much been choppy in that big range between that blue support line to the 200-day moving average, okay? Now, I want you guys to check out seasonality. All right, I made a video a few weeks ago. I said that bear season is approaching. You can check the video, and it's on the thumbnail. Bear season is approaching, or is here. You see a bear walking, and it pretty much tracked with the seasonality. Bearish in the second half of January to new lows. And you look at that daily chart, obviously, since the second half of January, around there, went down and dropped to new lows. So if we look at that, if it continues to track with the seasonality, we should get some bullish momentum heading into February. So it's possible February, the beginning of February at least, we're going to get some bullish momentum relief rally before we head down to another low. Okay, so we look at the charts. We've been testing that 200-day moving average. Okay, keep in mind, price action is number one indicator. That seasonality is cool, option flow is cool, RSI is cool. However, gotta let the price action guide us first and foremost. All right, these other things just help with our conviction in the direction that we think it's heading. Other than that, price action is number one. Okay, so below at the level would be, the support level would be around 428.9. So we say for about 429. Below that, I would be bearish, and we can head to new lows. However, above the 200-day moving average, which is currently at 442.4, I think we could get a squeeze up to this yellow trend line right here. This yellow trend line connects the November 2020 low to the October low. Okay, I think we had another low. Yeah, around right here, the January 2021 low, back to the November 2020 low, then the October 2021 low. That's a lot of numbers. Anyways, when we that was a critical support level, by the way, and when we lost it, we never got a back test of it. So I think if we break above the 200-day moving average, we actually clear it, right? This is resistant right now. We get above it, and then it treats it like support. That's a sign that we could go and test this yellow trend line right here that we never back tested. And that could head all the way up to 454 to 455. Okay? So that's the bullish scenario for me. All right? If we continue to get rejected from that level, of course, play it level to level. We'll possibly see more downside, more chopping down to this blue support line. Okay, so between this blue support line and the 200-day moving average is just choppiness. All right, you can try to enter as support, take profit at resistance, or short at resistance and take profit at support. We don't know, but keep in mind, we don't know how much longer this choppiness will last. Okay, so you make sure you wait for confirmation before you instead of just blindly entering the trade. Okay, overall, this is just a bear flag, pretty much a bear flag. On the daily chart, that's a bear flag. When you see a big down move like this, that you see, and then there's base and sideways like that, building energy, that's usually bearish price action. Okay, usually in general. Of course, if it heads up past the 200-day moving average and squeeze up to the 454 to 455 range, that could be a sign that we are heading up higher to more relief rally. Okay, because you see this white trend line never got that third touch. Okay. Also, you see how the previous low right here, that's around 456.6. So remember we talked about the ABC correction based on Elliot wave in yesterday's video. So this right here would be the C wave. That's based on which one is it? It's this one. This is called the expanded flat Elliott wave correction. So the C wave will be a 5-wave move to the downside. Okay, 5-wave move. So we're supposedly we are still in the 4th wave, which is looking like a bear flag. So if we continue to trade below this 200-day moving average, I'll still be biased to the downside. It's still a good area to short from, unless it recaptures. Okay, then you gotta be willing to change direction. All right. Now, usually the 4th wave shouldn't overlap with the 2nd wave. So in this case, this is the 2nd wave right here, which is the low at 456.6. So if we see the SPY above that level, above the low of this candle, that could be a sign that the ABC correction is canceling for that 5th wave. That's always a possibility. All right, because if enough people are noticing it, I doubt the market makers will want it to be that simple for us, right? So anyways, so play it level by level above the 200-day moving average, 442.4. I am bullish up to 454 to 455. All right. If we still getting rejections from that level, I am bearish to the next support level of 429. It will be 429. Okay. And below 429, I would be bearish to the next support level, all right, around 421 to 422. But I think we will get a new low if we break 429, if we break this blue support line, all right? And it will align with this expanded flat Elliott wave correction. Okay, guys? Taking a look at the VIX, it's lost that 28 support level, okay? So it's going to be resistant for next week. Needs to get back above to continue to look bullish. If not, 25.8 is next support. And then 23.5 below, okay? So, above 28, I'm bullish. Below 28, I'm bearish. We'll keep it that simple. It's not easy. I get it. The price action likes to play with our emotions. But just keep it that simple. Just remind yourself. Above 28, VIX is bullish. Below, VIX is bearish. Okay, and it usually goes in opposite direction of the SPY. So if the VIX is bullish, SPY is bearish. If the VIX is bearish, SPY is bullish. All right. Triple Q had a nice trade with the Triple Q. Quick scalp with puts. That was a really, really quick one. But overall, bullish day. We see a bullish engulfing candle. SPY also had a bullish engulfing candle, by the way. All right. So that's a good sign for the bulls. Anyways, not guaranteed. Anyways, Triple Q, bullish engulfing candle, and first close back above the 5-day moving average. Okay, alerted Triple Q on Discord today. I think I had a couple of alerts. 3:38. So this is alerted at 9:45 a.m. Guys, keep in mind 3:38 so far is being a strong support for Triple Q. If we lose it, new lows come in 3:34 first. All right, so but first resistance, which is usually the price target, 341.5 and above puts the 5 DMA 344.5 in play. So how did it go with Triple Q? Okay, look, started the day, dropped right to our 338 support right there, and then it just moved up for the rest of the day. It broke. We had 341.5 resistant. Broke that, went up to 344.5, broke that. Yep, and it just went beyond. So pretty good technical analysis on Triple Q. Anyways, the Triple Q closed above the 5-day moving average, which is a good sign that a relief rally could be on the way. Okay, next resistance is at 351.6. I think it closed at 351.8. Yep. So it closed a little bit above that resistance, so it should be support. But it depends where it opens for Monday. But the above 351.6 put 355.8 in play. Okay, guys, and then play level 360.95, and then we could back test that orange bull flag that we never back tested up here around 364. Okay. I would be bearish again if 347.4 is lost. That's where the 5 DMA is. Also, a Fibonacci level. All right. So they're both telling us, hey, it's a support level right there. So it makes it a strong one, critical. So below that, I will be bearish. Possibly another new low is on the way. Dow Jones also have a bullish engulfing candle. Is that a bullish engulfing candle? Yeah, it's a bull. Kinda. All right, but it has a decent sized body with a long wick from the bottom, so it looks bullish. All right, went down and tested that 338.6 support. Saw some demands come in, and it closed back above that 346.61 level. All right, so the 200-day moving average is currently at 349.89. So could we finally get that back test on the Dow Jones for the 200-day moving average? Okay, so if it happens, watch reaction. Okay, it's around the fib level is around 350, and the 200-day moving average is 349.89. So just a few cents off. Okay, so just look at 350. Okay, watch how the Dow Jones react to the 200-day moving average or the 350 level. Above it is bullish. Rejections from it, guys, that's a sign. That's a sign that, we could get more downside, okay? Could be just another big back test and go scenario, okay? So, 346.6, I think we'll keep the 200-day moving average in play. Watch reaction from that level. Rejection or sharp rejection, bearish. Above, and we recapture it, bullish. Keep it that simple. IWM, it lost, yesterday it lost 191.6. Lost that support level, closed below it, but today, look, recaptured it, and is on its way to test the next resistant level at 195.79. Now, usually this past week, we lose the support level, we back tested maybe a couple of times, head down to the next support level that we take out, back test that lost support level as resistant, then we head down lower. All right, as you can see, back tested this level twice, 3 times, failed, came to this support, lost that support, came down to this support, but instead of back testing that support and heading down lower, IWM finally got a close in a nice recapture. So the 5-day moving average is currently at 196.6. So that's very critical what happens at that level. All right. Also, there's resistance at 195.79. So kind of similar to the Dow Jones. If we get some rejection from that 5-day moving average, that's a sign that we're heading down lower. Okay. If it closes above it, that's a bullish sign that we're getting a nice long-awaited relief rally for the IWM. Could go test 200.93, and above that, I'm bullish with a nice juicy move to the upside, 209 and then 213 and so on. Okay, Tesla, what a crazy stock and volatile stock this is. We take out the moving averages. So yesterday we had a call, an alert that if Tesla loses this support level, at the time it was support on this orange line, 854.28, it will come down and test this blue support level that's been support for us for quite some time, since May of 2021. Had a few touches, so this level's been respected. Yesterday it closed just a little below it, and today it dropped below it, looking very bearish. Washed a little. Remember I told you yesterday we had support at 802. Washed below it a little bit, recaptured it, which is bullish, false breakdown. Came back up and recaptured this blue support level. All right, it was around 833.3, no, 831.4, way off. Okay, so we recaptured that level. We was bouncing around it, chopping around it, but it came up and went up and retested that orange level. All right, that was a previous high that connects the low of October 2021 to the low of January 24th, 2022. We lost that level in this back test. So is this a back test and gold scenario? Back test and then go down lower is what I mean. All right. So above 854.28, I would be bullish on the Tesla with 886 in play, then 927 and so on. Okay. But if we continue to get rejected from that level, that's a good sign that we are going to head down, possibly break this blue support. That's very critical. It's been a strong support for us for a while now. And if that breaks, I think the Bears gonna eat a lot more than they've been eating. If they didn't have enough, well, they're gonna have a lot more to eat. Okay, below, I say about below 831. Okay. Anyways, that's all I got for you guys. Hope you guys have an awesome weekend. I hope you found value in this video, and I'll talk to you all soon.